Hi guys, we're back for another episode. We're going to talk about a couple of stocks here that I'm tracking, and some of them are crashing hard, which is great news for me. I don't know about for you, but it's really good news for me because I like to buy things when they're bleeding. Before we continue, I just want to show you we're going to be interviewing Neovolta. This is coming up in a couple of weeks, so we just want to remind you to hit like and subscribe. Get notified, hit the bell because when this drops, you're not going to want to miss it. It's a tiny market cap company that's doing battery tech like Tesla Powerwalls. This is a really cool play on the EV sector, battery tech, solar, all of that stuff. So keep an eye out for this video. The other piece of news is that we're going to be doing an interview and sort of a bull and bear case for FUV. That's right, I've said it, with LG Investments and Research. It's another YouTube channel. I'll leave a link. You can watch his stuff. It's great. He also has a bull case for FUV. I have a bull case for FUV. And Carlos might have a bear case for FUV. So get ready for that one, guys. Remember, I'm not risking my whole portfolio on very good foods. I'm doing a small portion of my portfolio. So at this price, it's just irresistible. So anybody's so scared and all this negativity about them raising money. I mean, look, they're gonna keep raising money. Once again, in my last video, I said that I wish they did it when they were around $5 or $7. They could have raised some money. They could have raised way more money than now at $2. So that's really the problem. The fact that we're going to be diluted, this is going to keep happening. So wake up, people. This is a tiny company that's going to dilute us for the next 5 years, maybe 10 years. I hope it's only 5. But that doesn't mean it's not growing. It could still be growing. I was lucky enough to buy it this morning, I think at $1.70 or $1.69. Can it go down more? Yes, it can, but it's so close to what I keep talking about for the last couple of months. If you've been watching my videos, I've been talking about this for months now. We're at the market cap of $180 million. And yes, they're overvalued. We looked at their price to sales. It's kind of crazy. It's still at around 30, 36. It's kind of high. But we're betting on the future of very good foods, of very good butchers. We're betting that they will scale at least somewhat. And if they start to scale, even doubling production, that price to sales can come down really fast. Just to play a little clip, just to show you that they're still busy, they're doing things. It's not like they're sitting around. Mitchell Scott is having interviews. He's out there. He's not one of those CEOs that's hiding, like Trevor Milton from Nikola, or even the Arrow guy. I keep trying to reach out to him to get an interview. He's not answering. And they're not doing a lot of interviews. So there's a couple of smaller cap companies that are not in the forefront of media, trying to get attention, trying to show that they're legitimate, trying to be serious about it. This guy, Mitchell Scott, is trying to be serious about it. And that's why I'm investing in the company. It's not only about the company. It's not just that I believe that plant-based food is important. It's also that this guy, it looks trustworthy. That every time I hear him talk, I believe what he's trying to do. I don't think he's trying to scam me. Isn't that part of investing in somebody? It's not just the company. It's also the executive board and the CEO and the co-founders and all of that. So let's hear a little bit of Mitchell Scott and what they're up to.
Let's talk about this pilot program, because a brand new pilot program set to launch very shortly in December, in fact, with the company delivering meals directly to consumers' doors through such companies as, you may have heard of a few of these, Uber Eats and DoorDash, to name a few. Tell us a little bit about this program.
Yeah, so this is a pilot program actually for our meats. So it won't be a prepared meal, but it'll be our meat products. And what really kicked us off was we saw that there's going to be a big turkey shortage apparently hitting America this year. So we thought, how can we get our products to consumers more easily? So we partnered with a number of different companies, including Uber Eats, DoorDash, and a few others. And we're going to be launching in I think 10 or 12 cities in the States with 30-minute same-day delivery. So you go on your app, there'll be a little Very Good Butcher store, and you'll be able to select and order your meats and have it delivered within 30 minutes.
I'll leave a link to the interview. The point is not this particular program they're doing. The point is that Mitchell Scott is out there. He's talking to the public. He's telling them what he's doing. His face is everywhere. I think he believes in his mission. So it makes me a little bit more comfortable to invest as the stock is dropping too. If I don't hear from the CEO, I don't know what they're doing. They're not releasing anything. I can't get any information. I'm trying to email them, and I have emailed a bunch of CEOs. Some of them never respond. And I'm talking about small companies. I believe Mitchell Scott is doing the right thing here. He's talking to the public. He's going on channels. He's going on TV. He's doing whatever he can to let people know that his company exists and that he's trying to make it. So this is why I'm not too worried about them exactly failing even as the stock drops. So let's go to the chart. If you've been following me, you've seen this line many times, and now we've finally broken it. So am I not buying? In fact, I'm actually buying harder now because at $1.70, like it was $1.70 an hour ago or so, that it seems ridiculous. Like if it's $1.55 or $1.70, it doesn't really matter in the long term if I think it's going to over $10, right? So I haven't bought everything I wanted. I bought a lot of what I wanted. So we'll see if it actually hits my $1.50 price target or $1.55, which I keep saying. If it hits that, that'll just be like a nice pat on my back that it happens. That's great. But of course, I'm going to be buying at these prices because like 15 cents, 20 cents, it's just not going to matter. That's the point. If they're going to fail, they're going to fail. And the extra 15, 20 cents that I save per share is just not going to matter. So, this stock doesn't have to stop at $1.50. We know that it can drop. Look at this support line, this other point at around $1. So if there's just negative news over and over coming out for this company, look, it can totally hit $1. Like no doubt about it. It can go bankrupt. Do I think that those things are going to happen? I think they're less likely. So it's already pretty bearish right now. Can it get more bearish? It always can get more bearish. Okay, so that's the update. I think this is a great price and I've been buying. It's happening. Zillow is back in the downtrend. I'm back to accumulating Zillow. I thought it had broken out. It has not. And there's a reason for it. So right now it's trading at $86, still at a modest $24 billion market cap. And I think this is still a great investment. So I hope for a cheaper price, but I am buying it on the way down again, as I do everything in these last couple of weeks. This was the main reason that they stopped buying houses. So the iBuying is sort of stopped for now until the end of the year. They have too much inventory. I don't understand, honestly, why investors would run out of this stock because this is a new business for Zillow. It's ramping up. And at some point, they have too much inventory. So they stop. They have to fix all these houses. They have to sell them, and then they can resume buying again. Why is this so hard to understand? If you were an investor and you bought the maximum houses that you can handle, let's say it was 2 for the year, well, as a single investor, and then a third deal came up to you, well, maybe you can't get that third deal because you have to get rid of these 2 and move on to the next. So Zillow's in the same boat, except with way more money, right? They have their 3,800 or so houses on their books, and they have to move them. That's the way it is. We're back in this downtrend. We were above it for a while on this green line, and I thought we were going to hold it, but after this iBuying news came out and they can't buy any more properties, we're back on the downtrend. So I do expect that we might hit our $80 and $75 price targets. It can go lower. This is the bottom of the trend here at around 60, $62 or so, if it goes that far. But I am definitely DCAing myself into this one for the long term. This is a high quality company, as I keep talking about. They're profitable now. This is not just a fly-by-night operator. I use Zillow all the time. I'm sure many of you do. It seems like a good investment long term. Even if I get it at 86 and it goes to 75, that's still a good price for me. The last bit of news will cover Enphase Energy. And this is my favorite little company. That's right. My favorite little $23 billion company right here. Short interest, 4%. I don't know the crazy people who want to short this. Sure, go ahead. PE is high. That's why they want to short it. The PE is high. But honestly, this is a great investment for the long term. At $188, and today it pumped 5%, and it's been pumping for the last couple of weeks. So it's doing really well. We've been talking about it since around $20, $30 if you watch our videos all the way in the back. So this is a great investment for the long term. You're not supposed to trade this stock. You're supposed to keep it because this is the 10, 20, 30x. Who knows where this can go? But I would be surprised if this $23 billion company does not one day become a $200 billion company. If you look at bigger energy companies, they do reach that high. So if this succeeds and solar is a real thing, which it is, I'm not even asking that question. I know it's a real thing. I have solar on my roof. There you go. It's a real thing. And I have Enphase microinverters on my roof too. So this is a legitimate company, great technology, and I used them personally. Okay, so let's look at the chart real quick. I did draw these lines before, and I think it's in this channel. So do I see it breaking out of this, even though it's a little bit above it if you take a look? I don't know. I think it's a little too soon. Honestly, if it breaks out now, I don't care. I have my bags packed and I'm ready to go to the moon. But I would doubt that this is the time that we sort of just fly off and it goes to all-time highs at 220 and 230. I hope that happens. I don't think it'll happen. I think it has to play out this sideways maneuver here. And if I am right, we will know soon, and it'll start coming back down to around 140, 150. Who knows where it'll get down? It might take a while to get down. But at this point, I would be shocked if after January, let's say even April 2022, I would be surprised if it didn't break out, if it does stay that long in this channel, just because of how bullish this company is and how much they're doing. They are supply constrained. They cannot make enough of this stuff to get it out there. Think of the solar penetration in America. I think it's at a percent and a half. Well, this is the beginning of the beginning. So I think we have the next 10 years, the next 20 years for solar to just explode. I'd be shocked if codes didn't change on people's houses to put solar all over the country and it was mandatory as the energy needs get even crazier with EVs and all this electrical stuff that we need to power, obviously. So solar and microinverters, all of this is just golden. And the other company I haven't talked about here, but SolarEdge is also a great company to invest in. I just feel Enphase has way better technology, so I'm also just investing in the better tech play. But having said that, I should be buying SolarEdge, and I am looking into it. All right, so this is what I think. I think that we might have a hard time breaking out. If we do, great, I'm ready. As I said, my bags are packed. And if not, then we are going to be trading back down here. And honestly, I don't care. I'll take another swing at Enphase at 140 or 150. I'll buy more shares. I just don't care if it goes down. This is one of those things like the more it goes down, the more I want. And I hope you guys are looking at this one because this is just, this is delicious, this company. That's basically it. These are the three stocks I've been looking at. I'm not buying any Enphase now. I think it's too high. Zillow, I'm buying. Very Good Foods, I am buying. And to finish it up, remember, we're going to drop our interview with Brent Willson from Neovolta in a couple of weeks. So please like and subscribe and hit that bell so you're notified when that video gets live. And we're doing another video with LG Investments and Research, which is a YouTube channel with great content. We're going to have a bull versus bear discussion for FUV. And basically, he's in Switzerland. I'm in New York, and Carlos is in California. So we literally have the whole world, the whole world talking about FUV. That's what we're going to do. From here to all the way to Switzerland, we're going to be talking about FUV and the bull versus bear case and what we think is going to happen in the future with FUV. So stay tuned for that. Hit that like and subscribe, and we'll see you on the next one.